Hello, I'm Matt Schwartz with Schwartz Insurance Group in Louisville, Kentucky, here with another in our video education series focused on employee benefits. Again, the purpose of our series is to teach you about reform and other basic benefit concepts, share the latest ideas and tactics that employers are using to be successful, and finally to position you to be a pro with regard to your benefits, communication, and culture. Today we want to talk about self-funding. So in the long history of group insurance, large employers have often used self-funding or partial self-funding as a method to gain greater control and potentially greater control over cost. So I want to talk about the basics of that. If you're let's assume that you're a fully insured employer considering self-funding, whether you be the typical group used to be really 200 lives and above, 100 lives and above, where really as healthcare reform unfolded and some of the changes in the small group market are coming online, we certainly expect smaller and smaller groups, quite frankly, even down to as low as 25 employees are going to have the option to go self-funded. So who are the best candidates? Number one is going to be a group that does have a stable claims history, so that meaning claims have been relatively stable over a period of time. Equally as important, though, is an employer that has financial stability and a little bit of financial risk and reward tolerance, because that is what self-funding is. It creates some reward, but it also takes on risk. So let's talk about that for a second. The way that normally you would think about it, if you think of $100 in premium that you're spending on a fully insured premium, and the idea with fully insured, you pay a premium to the insurance company, they take all the risk. So they take all the risk and they take all the reward if claims are low. So the idea with self-funding is that you have $100 of what normally would have been fully insured premium. You might spend $35, $40, maybe as high as $50 on what would be considered fixed costs. So that would be number one, administrative services. You have to have a network, discounted charges off of medical expense. And then of course you need something called stop-loss insurance. There's two types of stop-loss. Specific stop-loss actually guards against individual claimants. So beyond a deductible, which may range from $15,000, $20,000 on up to a larger group may have a $100,000 or $200,000 deductible. But beyond that deductible, that's the amount. That risk would get shifted to a stop-loss insurer. Anything below that is paid by the company as each claim happens. There's also stop-loss insurance called aggregate, which as the name implies, it's the aggregate of the entire group. So if all the claims add up to a high dollar amount, this is what protects the company against that. So the best candidates are those that have not only stable claims experience and also financial stability and wherewithal, but also those groups that are most interested in gaining more control. The big advantages of going self-funding, number one, is you do theoretically over time you will save money, because if you think about things like profit margin that an insurance company keeps, local municipality taxes and fees that apply to almost any jurisdiction. Now with the ACA we have an additional what's called an insurer tax. That's 2.5% to 3% of premium. When you add all that up, if you look over a longer period of time, 5 years plus, self-funding for the right employer should save anywhere in the range of 5 to 8%, and that's why more and more employers are looking in this direction. So if it's something that you might consider, certainly let us know. There's an analysis that we can go through. There's certainly lots of details that go along with self-funding and responsibilities. So it's important that you know exactly what you're getting into before you take that step. If you do have questions specific about your own situation, please let us know. We're happy to help. Again, welcome any feedback that you have with regard to today's topic or suggestions for any future topics. I'm Matt Schwartz with Schwartz Insurance Group in Louisville, Kentucky. Look for the next in our video education series focused on employee benefits. And you too can be a pro with regard to your benefits, communication, and culture. Thank you.